How do you want investors to think about this consumption sector?
India household consumption number, really, it has doubled in the last 10-12 years.
Can you give us an idea of the portfolio mix in terms of sub-segments?
In the next 10 to 12 years, India has the optionality to go 4x in per capita income. The biggest money is made when the consumption is still evolving.
Hi everyone, welcome to the 6th episode of Fundamentals. And today we have a special guest with us, Mr. Sonam Udasi, who manages Tata India Consumer Fund. India has a population 1/6 of the world. It has a median age which is much lower than that of developed economies, and its per capita income is on the rise. This forms the rock-solid base of the fund manager's belief in the growth, longevity and relative predictability of earnings which comes through in this sector, consumption. So everything that you think and believe should find an expression, and Tata India Consumer Fund is an expression of his rock-solid belief in India. Let's hear from him straight up. Welcome, Sonam, and
My pleasure.
Nice to be talking to you. So in the last 10 years, we've seen the performance, the data. CAGR returns of this sector, of the consumption sector, is almost equal to another big sector, financials. Pharma, of course, has yielded less than maybe half of what consumption has yielded. In the last 3 years, again, the returns of the consumption sector are equivalent to financial services and pharma. IT has yielded less. And this sector, we all know, is much less volatile, maybe half as volatile as some of the other secular sectors, that I mentioned. How do you want investors to think about this consumption sector?
So very interesting. So I'll just want to step back a little. So India is by far one of the fastest growing consumption markets in the world today. India household consumption number, really, it has doubled in the last 10-12 years to almost about $2.5 trillion, which gives you a growth rate of about 7.5%, not looking so great, but it's much faster than US, much faster than China, Germany. So by far the fastest growing. You talked about per capita income in your opening remark. So per capita income wise, we have just crossed $2,400. You have doubled per capita income from 2008 to 2019, from $1,000 to $2,000. The basic rule of compounding is that the next doubler comes in half the time. So all said and done, if we don't go to war and there is no substantial black swan event, logically in the next 6 to 7 years, India should be coasting at $5,000 per capita income. $5,000 per capita income versus China today at $12,000 to $14,000. Nothing very material, but that means your affordability index of what you can consume goes up substantially.
True.
So that's and every country has done it in the world. Europe has done it, Southeast Asia has done it, China has done it, many countries which cross that threshold. But the bigger story really is not that. The bigger story is that at some point when we cross $3,500, maybe 2 years down, somebody would write about it that India has a potential to get to $10,000 as an optionality. So in the next 10 to 12 years, India has the optionality to go 4x in per capita income. And I think this theme of consumption or sector that you call it mirrors that per capita income trend perfectly. If you want to capture that, this is one of the big ways to sort of capture this.
True, absolutely. But the sector has evolved. FMCG is a known name, known sector name, known sub-segment name, consumer durables, consumer services, and now we have new age companies like e-commerce and fintech and quick commerce. How have you incorporated all of these in your journey and right now currently in the Tata India Consumer Fund portfolio?
I think two mega trends are there that drive what we do in this fund. Number one, India's median age is 29 years. So fairly young country, and therefore habits are evolving much faster. Per capita income trends are improving. Also, women, they are joining workforce so whether you're a tier 1 or a tier 4, rich or poor, the number of women in workforce is substantially improving, and they tend to consume very, very differently. So there's a different class of consumption patterns that you have to target as well. So I think the fund, what we have tried to do is that from traditional kirana, say 5-7 years back, you are going to a click economy, you are going to from how young would consume or women would consume. So you want to incorporate everything. So from that perspective, say 5 years back, you would have a host of durable names and a host of consumer staples names in the fund. Over the last 4 years, consumer services is a big segment that we have gone in for. It encapsulates e-com players. It encapsulates D2C players as well, new age companies. It also looks at women bearing segments. For example, in terms of penetration, what makes the job of a household easier or more efficient when both are working? So consumer appliances, that penetration goes up. That's one trend. The other trend is eating out, dining in. Also ready to eat masala, processed food. So food is a very, very big segment within staples rather than traditional detergents, for example.
So are these segments also, of course, high risk, high reward relatively within consumption? Some of these?
No, I would say it's early stage. So there is that amount of risk. The rewards are known, that's the trend that you will follow through. If per capita income trends keep going up, even if they do not grow at the pace that I am talking about, slightly slow, the trend is in that direction. And that's how the consumer will evolve. It might do slowly, but it will evolve. As money comes in, we have seen the patterns in all types of economies. Southeast Asian, European, Japanese, Chinese, everybody goes through that. And we'll just follow through in our own way. But we have to be open to the idea that that's where we are going, and the fund has to try and capture that as we go along.
True. I think the fact that this segment is not cheap should not come in the way if somebody has to capture this rock solid trend. Very true.
So when I started my career about 25 years back, even at that time, the big daddies in FMCG nothing was less than 50 times when I started my career. The reason why that is there, that one, the visibility and predictability of EBITDA that we call is very, very rock solid. And once you reach there, it's very, very difficult to dislodge that. It's not volatile. It does not depend on export markets, what's happening to your global client. It's all domestic. And as long that number, let's look at it. It's not the best of data to look at. We are now the most populous country in the world, right? We are also, by the way, fastest growing, country in the world. Both dynamics put together, which China was actually 15 years back. So you have got into that position, and you will take the benefits and the pitfalls of this. So consumption is a benefit of what we are trying to achieve in this fund.
Right. Make the best use of what we have, of course. So we know that this is a true to label fund. We've been hearing you, and it is filed as a sector fund. There are some other funds, consumer funds, which are filed as thematic funds, and also the fact is known that there is a 20% leeway, because the mandate is 80% adhere to the sector. So 20% can be utilized in some other. How do you construct a portfolio to be true to label, to take care of some of these things, or not do some of the things which probably the peers would be doing?
So what we have kept as an open mind is that consumption can be any part of consumption. We have tried to stay true to the consumption pattern, where the per capita incomes are growing, what they can be used incrementally. So while we stay true to label on the themes of durables, retail, FMCG, auto, media, these are what, that's what we call core consumption. We've also started to encapsulate that incomes are growing within financial services space. We would want to be with the financialization of savings piece, maybe the exchanges, maybe the brokers, maybe the AMCs. But we want to be in unlevered businesses. We don't want businesses which look at leverage or lending businesses, so to speak, because that's not, you can get that in different funds. So with the consumer in mind, whatever they want to do with their savings, whether to really consume, to use that to create more wealth for themselves, we have started to encapsulate that piece as well. And we will keep, enhancing this as the consumer evolves and keep true to that time.
True. Having spoken of some of the trends and themes that you have, had exposures in this fund, can you give us an idea of the portfolio mix in terms of sub-segments and what do you like more currently?
So I'll just break it down in three pieces. One, in the traditional staples piece, we like food more than say detergents, and because that's one piece. I think processed food industry in the next decade will become 5x from where it is today. The penetration levels of branded food or organized food that we call, it's hardly 30%. So whatever Indians consume, only 30% is in packet form, 70% is still loose. So there is a big scope for formalization of that, and we will want to focus. So we are overweight in that segment, in those kinds of names. We'll be looking at new names as well. I talked about women, so anything that massages the ego of a woman, we would want to incorporate that, because I think that will grow faster. So that's one piece. Platforms, while e-com platforms currently do not make materially high cash flow or profitability, the TAM of what they are getting to, because India is a very, very diverse country, very, very deep country, but aspirations are very high. So logistically, who can get it at cheap cost to someone and get that solution, they will become very, very big at some point. Just remember Amazon, when they started out, how they evolved in the US. And if you are an Amazon investor, while you have made tons of money in the last decade, but in that decade, Amazon must have given 3 heart attacks to their investors if you were holding that. So I think this will become bigger. So consumer services piece, I would say, is something that we are excited by, and we'll hold to that. The third piece, I think, is more traditional cash flow driven, and we want to be sure of where we want to be. Also, because we are a young country, both on the sub 15 teenagers and above that, those are segments that pockets of consumption that we are excited by, lifestyle, discretionary, even children stationery, children toys. Those are big segments that will do their own thing. And because you are a populous country, you will consume a lot of diapers, a lot of other stuff. Can we have a play? So you have to think a little differently. Also snacking is a big thing. Within the consumption pack, that's growing much faster.
Yes.
Those are
snacks.
Any kinds of snacks. For us, really, what's growing faster, whether healthy or unhealthy. But the focus is really there, that you should be a growing business. It's a growth kind of fund. You want to be growing because you are paying a little higher multiple than the broad market. Then you should, the growth should justify that multiple.
True. Absolutely. And while you construct this, what is the mix of steady earnings stocks and stocks with earnings surprises in the portfolio? Do you track that number, or it's incidental?
No, it's incidental, to be honest with you. But there is no frame in mind that we want to have an X percentage. Sometimes what we try and do is, if we can judge where the market, if we think that the market is right now in a risk off mode, maybe we'll have more cash flow throwing companies and you'll want to veer your portfolio towards that. But generally we keep our eye out for what we want to do in the next 3 years and where this consumption landscape is evolving, and be true to that, because then you will miss the wood for the trees.
True.
Frankly. And we want to keep our eye on the woods. We want this to be a wealth generating fund and to evolve, because the biggest money is made when the consumption is still evolving. You are still a low per capita income country.
True.
On the path to trying to becoming a middling country. And if you can capture a sense of that, then I think our job is done.
True. Actually, very well put, and in an interesting manner, the way, the lens of the portfolio, you have explained. With the newer segments coming in, do you think a lot of these segments sit in mid-caps, and that is why now, mid-cap exposure in this fund also probably has increased incrementally over the years? Or is that
No, I think it's an outcome of what opportunities, because see, when the customer is evolving, stock markets also evolve, investors evolve, the companies who want to get listed has evolved. I haven't measured it, but I am assuming that 25% of the companies that we own today were not listed maybe 6 years back in India. That's how these are newer. Like I'm talking about processed food, for example, or food as a sector. There'll be newer companies, in my view, that will come and get listed. There'll be newer segments, and you have to keep an eye out what's possible, what's not, what's succeeding now. Sometimes you fail as well. It's not as if that everything is roses. We have thorns as well sometimes. But the idea is to keep to that logic that the Indian consumer is evolving. There is money in the hands of people. And apart from the basic needs, your customer is aspirational. Big weddings are aspirational. Luxury cars, you are one of the fastest growing markets for luxury cars.
True.
So those are trends that you have to be aware of and try to see whether that can be converted into cash flow, and then am I buying it at the right price?
Awesome. Thank you so much, Sonam. Loved to know the nuances of the fund and the consumption space. Happy investing in Tata India Consumer Fund. The fund manager's conviction in India and Indian consumption sector is unbeatable. It encapsulates and incorporates the pulse and trends of the Indian consumer very, very well, while keeping an eye on various newer segments, also incorporating the older segments and the valuation chain. So happy investing. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.